This is Matthew Cratter from Trade University, and today I want to talk about how China is secretly taking over the world. Everyone knows that so much of our manufacturing is done in China and other parts of Asia, but what a lot of people don't realize is what's actually happening behind the scenes and what China, in particular the Chinese Communist Party, the CCP, is doing with that money. So China officially joined the World Trade Organization, the WTO, in December of 2001. And ever since then, there was this implicit deal, especially between the United States and China. The U.S. buys stuff made in China. We outsource all of our manufacturing there, or the majority of it. And then the U.S. sends these dollars to China to purchase the stuff that's made in China. China then recycles those dollars. China uses those U.S. dollars to buy U.S. government bonds, which are also called U.S. Treasuries. This has the effect of helping to keep U.S. interest rates low. When the price of treasuries goes up, or when people are buying them and supporting them, it keeps interest rates low, especially at the long end of the yield curve. And having lower interest rates helps to finance consumers to buy more houses or bigger houses, or to fill their homes with more stuff, put it on their credit cards, take out other sorts of loans, etc. So you have this, you might call it a virtuous circle. Unfortunately, what it did lead to was a huge outflow of manufacturing from the U.S., a lot of working class jobs leaving, and also a lot of more consumers getting into debt. But it was a great deal for the elites and for the shareholders of companies, because basically once you offshore your manufacturing, you can do it for much more cheaply in various other countries besides the U.S. And so you have higher profit margins, and then the stock market awards your stock a higher valuation because of these higher margins and lower costs. So this was a great deal for the elites, not so great a deal for the working class and middle class in the U.S., especially people who relied on those manufacturing jobs, because we can't really have a country where every single person is either in finance or trading crypto or doing software. It just doesn't work. And we've seen the supply chain crunches as a result of the pandemic really shows how this has become really a national security risk as well, having so much made overseas. In addition, losing your job, not being able to find a job, watching your whole town dry up, has led directly, obviously, to the opiate crisis in many parts of the country, especially in the Rust Belt in the U.S. And then, of course, we get to ignore a lot of the very poor working conditions that happen in China. The poor workers trying to commit suicide and jump out of the building because they have to do these 18-hour days building your iPhone at Foxconn. But the interesting thing about this is the value accrual all went to the shareholders of these various companies. Apple is a great example of this, where all the dirty work is done overseas, and then they get to slap a sticker on it and say designed in California, which has this great brand. Everyone gets to feel virtuous. Everyone gets to feel very pro-environment, because you get to hide the ugly underbelly of manufacturing and all the waste involved. It's hidden away somewhere in Asia. Of course, it worked well. It made the stock market go up. It provided a natural buyer for U.S. Treasuries, and it especially worked well for shareholders, among whom I count myself. So I definitely have benefited over the last 20 years, directly and indirectly, from this recycling of the trade surplus. Now, this all changed around 2013, when China stopped increasing their treasury holdings. We don't know exactly why they did this, but we can speculate that they weren't happy with all the money printing that began in 2009 and the lack of budget austerity and fiscal austerity. And when you have a lot of money printing, when you have a lot of inflation, whether it shows up in the headline number or not, this does hurt fixed income holders, bond holders, anyone who holds U.S. Treasuries. And so I'm sure it became clear to them that they weren't making an inflation-adjusted positive return anymore at that point. And they're certainly not now, when the CPI is at 6%. So we can see here the rise in China's holdings of U.S. Treasuries from 2001, when they entered the WTO, then peaking, as we said, somewhere in 2013, 2014. I guess the actual peak was in 2011. But we can see that, especially considering that GDP has grown so much, the economy has grown so much, the relative percentage of Treasury holdings by China has gone down in real terms and also in adjusted GDP adjusted terms. If you want to see this month by month, you can look up the tick data that's provided by the U.S. Treasury. We can see here that Japan and China are the two largest major foreign holders of U.S. Treasuries. So what did China then do with the money? Because they were still running these huge trade surpluses, which means that they were exporting more than they were importing, so they ended up with all these excess dollars. They didn't want to put it into U.S. Treasuries anymore, so they decided to stop adding to these Treasury holdings or just to sort of maintain them constant and instead take this massive trade surplus and use it to start to acquire hard assets around the world. Smithfield, very classic, traditional American pork company. You can see their logo here. They were bought out by a Chinese firm. In addition to China buying a lot of Latin American cobalt, copper, gold, iron, lithium mines. And this was really ultimately a violation of the Monroe Doctrine, the U.S. allowing all of this to happen in their own backyard. China has done this especially egregiously in Africa, which is obviously very resource rich in terms of metals and other commodities. And the way China does this is really the heart of the matter here. China offers U.S. dollar denominated loans against infrastructure assets in Africa, gold mines, copper mines, railroads, other infrastructure. And they do it in a sort of predatory lending way. And they're very happy when an African country or company defaults on their loan, because what happens then is they have to hand over their railroad or gold mine to China. And this is what China really wants. They don't just want the interest on the loan. They want to take control of these assets, especially because China does not have a lot of these commodities within their own border. Here we can see the original compromise, the original agreement between China and Uganda's Entebbe International Airport. There was a $200 million loan, and now Uganda has defaulted on this, and China is poised to take this airport, to take ownership of this airport. Again, this is the only international airport in the country. This is what happens when you make deals with the Chinese Communist Party. Things usually don't end up going very well. And these contracts have been written in such a way that they're very, China's obviously very happy if the borrowing party defaults. We can see here that the loan had a 20-year maturity period, and yet somehow they still managed to default on this. And so China might be taking over. This is just another example of infrastructure that they may be taking over. Meanwhile, in the U.S., what are we focused on while this is happening, while China is taking over the entire world? And again, this is nothing against Chinese people, nothing against Chinese American people, nothing against the glorious history and culture of China. This has to do with allowing Chinese communists and the CCP to take over all these critical hard assets everywhere in the world. Meanwhile, what's the U.S. focused on? The U.S. is focused on triggers being triggered, finding safe spaces for college students, and worrying about whether Polish people who used to write novels about Africa many years ago were racist or not. Obviously talking about Joseph Conrad and Heart of Darkness. Meanwhile, there are real human rights violations going on. It's sort of the frosting on the cake of China taking over Africa. This is a real problem, and it's being financed by the U.S. China is no longer the main financer of U.S. deficit spending, at least on the margins. This is why our central bank, why Jerome Powell at the Fed has to rev up the money printers and buy all these treasury bonds that China would still be buying if they were still doing this sort of virtuous cycle. Meanwhile, instead, China is using these trade surpluses to acquire hard assets all around the world. And we are actively sending them the dollars to do so through the trade deficit. It's a trade deficit for the U.S. It's a trade surplus for China, and this is where they get the dollars to do it. What we can conclude here is that China is actively exploiting the U.S. dollar global financial system to take over the world. People always talk about how it's so wonderful for the U.S. to have the global reserve currency, and yes, it is it is a nice thing to be able to just print up money out of nowhere to buy crude oil, to buy gold, to buy Bitcoin if we were smart. But what's happening instead is that we're actively losing ground to China all around the world as they use these dollars to buy up strategic locations, strategic commodities, and natural resources. It's probably a good time. At least my children are all learning Mandarin. There's certainly no downside to this. China, as I said, has an amazing history and amazing civilization over the past thousands of years. But I think global reserve currencies never last forever. It'd be great if we could get Bitcoin as the global reserve asset, and I think there's a very good chance that happens. There's also a very good chance that China continues to grow. They're behaving in a much more intelligent way than the U.S. They're focused on long-term geopolitical tactics, whereas the U.S. is mostly focused on virtue signaling and outsourcing everything to other countries. And so we become very dependent. It becomes a security hole when you're dependent on other countries to make basic things like medicines. And even when the U.S. military is outsourcing defense weapons production to overseas. If you do study Chinese, I like this meme. Hopefully it doesn't get me in trouble with YouTube. Beware of the tones and the infinite homonyms. But it might make sense, especially if you have kids who are school age and they're thinking of what language to study. I don't think it hurts to study Mandarin, and I don't think we'll see the end of the rise of the Chinese Communist Party for some time now. The one really dumb thing they did was kick all the Bitcoin miners out of China. This gives us a real strategic advantage, but I don't see any politicians, at least any major politicians, trying to take advantage of this and use this for the U.S. Obviously, a lot of Bitcoin miners have moved to the U.S., but we should be actively building our own Fort Knox that holds Bitcoin, and we should be doing everything we can to secure the hash rate in the U.S. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.